Here with us on Closing Bell, time to welcome in Jai Bala into the conversation. Jai, thanks for joining in. Good afternoon to you and season's greetings. Wish you a very, very happy new year. So it's been an interesting start. I mean, the market had this very heady, end of the year party, and the start of the year is proving to be a little more tricky and volatile. Let's start with your take on the two main indices, the Nifty and then the market's problem child, the Nifty Bank. What do you make of the setup right now?
Happy New Year to all, Surbi. And see, the markets are pretty much doing, as I've been saying for the last couple of weeks. I have been saying that the banking sector remains the most vulnerable. And if you see today's price action, while the banking index is down 1%, the Nifty isn't that bad. It's doing just about a third of a percentage down. So, the banking index is the one that's probably going to take the markets down and lower. But before that, I would say, the probability of the markets having registered a top at yesterday's high is pretty high, but we don't have a support breakdown in any of the indices. So that's the pending confirmation signal we are waiting for. Until that point, tentatively bullish, very tentatively bullish. But as I've been saying for the last 3-4 weeks, we are very high alert for a trend change. At the moment, it's got a great potential. And we're just waiting for significant support to break down. And the sectoral indices and the larger markets are also cooperating. They have lost momentum considerably. Only thing that's been pending in most of the sectors is a break of significant support.
Interesting. Hi, Jai. Wishing you a good 2024 as well. And sounding a little bit cautious on the first time you're joining us in 2024, but that's the way you're seeing it. I wanted your view on two fronts. One is on the dollar index. Now, the dollar index had cooled off. It went all the way to, I think, 105, and then it cooled off to around 101, and that's what helped equity markets move up. So what's the trajectory? What are the levels you're looking at on the dollar index, point number one? And the rare outperformer last year was the Bitcoin. How do you see that moving?
Yeah, thanks, Nigel. Very important question. Macros are going to be very, very significant from this point going forward. Dollar index in particular and US 10-year yields both have very similar setup. And the dollar index, if it were to cross 104.26 over the coming weeks, it's not going to happen over the next couple of days, but it's something that you need to watch for the next few weeks. As long as 104.26 is not crossed, the bulls are a little bit safe. But if 104.26 is crossed, we're going to have a big surprise for the markets. And the setup for the US 10-year yields is pretty more important. And people have started factoring in rate cuts and things like that. I think, as I said last week, January is probably going to be a surprise for most of the market players, including the Federal Reserve. We're going to probably see a reversal. The potential for reversal in US 10-year yields is pretty high. We probably have one final lower low to be registered somewhere close to 360 bips for the US 10-year yields. Once that happens, the dollar index and the US 10-year bonds are very likely to rally, and the setup is shaping up pretty significantly. And when it comes to Bitcoin, I've been saying it's a measure of risk on in the market. It's breaking out today from a short-term pullback, and the push towards 50,000 is on. May not be an exact number, just a ballpark figure. But once that is done, I think the crypto is likely to pull back much lower and correct the move from 15,000 to somewhere close to 50,000. That move is going to get corrected significantly.
Okay, all right. Well, we have just about less than 10 minutes to go before the day comes to an end. Jai, thanks a lot for being with us. I wanted your thoughts also on, individual sectors. I mean, where do you see the major performances come through from now in 2024? And which are the pockets where you think could take sort of a backseat this time around?
Hi, Sonia. Good to speak to you after a long time. Your sector, Nifty Auto, is the most important sector for the markets. And if the auto sector were to break below 17,300, I think that's going to be pretty significant impact for the overall direction of Indian markets. And the outperforming sector right now for me is still the Nifty Pharma Index. I've been saying since August and all through August to October that 14,900 to 14,500 was my buying area for the pharma index, and that's worked out pretty well. And it's slightly exceeding my price objective of 17,100. And just now, Divi's and Dr. Reddy's is starting to look very favorable at this point of time. So if this momentum were to continue, I think Nifty Pharma is going to reach somewhere close to 18,300. But be very cautious. We are right now at the objective. Right now, the momentum is not dying. It looks like it's going to push further. And within the auto sector, I think M&M is going to be pretty crucial. Although Maruti and M&M are weak, I think M&M is more vulnerable than Maruti at this point of time. Tata Motors remains quite strong. So, that's how we play it. Look out for vulnerabilities within the auto space and the banking index if you're negative, but wait for significant supports to break.
No, so when you say vulnerabilities, what do you mean in the banking sector? I mean, what do you do? Do you buy the dips in individual stocks? Do you stay a bit cautious here? Because I know your overall tone is cautious, but generally in the last 12 months, buying the dips has always worked as a great strategy.
That's right, Sonia. See, in May of 2023, this year, I had presented a chart pointing to the very long-term picture of the banking index. And the highs that we have seen just now in December and January is a very significant high from a long-term perspective. Even if you draw, an internal trend line from the 2008 highs, it's that kind of a 13-year, 15-year trend line that we are talking about. The markets are hitting that level, and it's very close to a reversal. If the significant support for the banking index, 46,920, 46,800 were to break, that's going to have a deep correction, which will correct at least the move from the COVID lows. But we are still waiting for a little bit of price action to confirm this anticipated price action. So waiting for reversal to take shape. Once that is done, we'll avoid all longs. We'll go for cash, and rather than buying the dips, we'll go to somewhere close to 75% to 100% cash.
Just very quickly, I mean, two pockets. One is metals. I don't know if you've seen something on the charts, because I mean the stocks here in India have been doing very well right through December, and there's some buying evident today as well. And just as a sidelight, I mean Bitcoin, it's getting so excited, hoping that the SEC recognizes it. I mean, beyond the obvious equity trades, anything else interesting out there that you're seeing?
Yeah, see, the markets are a discounting mechanism. It's anticipating the ETF approval to come through. So once the news were to come through, it's probably going to be sell-on news. Just like how the markets went up for Bitcoin listing on the CME exchange, we had a significant top just as the Bitcoin got listed in futures in the CME market. So it could be something similar to it. The markets have rallied from 18,000 to about close to 50,000 now. When it comes to metals, I would call this as a relief rally for metals. I mean, the base metals I'm talking about. Of course, the Indian metals index have done phenomenally well, and they are pretty close to an exhaustion point. Copper has probably got a little bit of up move, somewhere close to the 4.06 mark on the high-grade copper. Once that move is done, we're going to have a very significant drop for the copper, which will probably take it below the 2022 low. So metals will be impacted by the time. So use this, bump up to liquidate and lock in profits. Not getting negative yet, but the setup will turn negative in the future. We can work that out once the setup has actually turned. At the moment, we're just looking at an exhaustive move for the most of the metal stocks.
Okay, noted your view. Thanks so much, Jai, for joining in and giving us your view on the index.